Good afternoon, audience. Glad you could join us today. We have a wonderful webinar that we think you'll enjoy. It's the federal funding resources for MDIs and other credit unions. So the NCUA's Office of Credit Union Resources and Expansion is conducting an outreach event. It's a joint outreach event with the Community Development Financial Institutions Fund, or CDFI. So what you're going to hear today is each agency is going to present their 2022 funding opportunities. For the NCUA, we'll present the 2022 grant initiatives of the Community Development Revolving Loan Fund. And then the CDFI is going to detail its small dollar loan program and other funding opportunities that may be of interest to you. So what we want to do during this is to promote the awareness of these programs to federal credit unions in general, and in particular MDIs and low-income designated credit unions. So my name is Catherine Baxter, and I am your moderator for today's event. So we have a few housekeeping items that we must go over before we start. Of course, if you can hear me well, you really don't need to adjust your volume. But if you're having some trouble hearing my voice, please adjust your volume as needed so that this webinar is going to be clear. From this website, please allow pop-ups. There is a Q&A feature on the right-hand side of your console. So please submit your questions throughout the webinar. And if there's a particular panelist or presenter that you'd like to answer the question, please address your question to that individual. In approximately 1 week, this webinar is going to be closed captioned for on-demand viewing in NCUA's learning management system. So now we have to read our NCUA disclaimer, and it says, the materials presented in this webinar are intended as an informative and educational summary of general community development, revolving loan fund, and small dollar loan program information. The NCUA has taken reasonable measures to ensure the quality of the data and other information produced by the NCUA that is available in this presentation. The NCUA, however, makes no warranty, express or implied, nor assumes any legal liability or responsibility for the accuracy, correctness, or completeness of any information that is available through this presentation, nor represents that its use would not infringe on privately owned rights. The slides are intended for educational and discussion purposes and do not constitute legal advice, nor replace independent professional judgment. Reference to any specific commercial product, process, or service by trade name, trademark, manufacturer, or otherwise does not constitute an endorsement, recommendation, or favoring by the U.S. government or the NCUA. So now that we've done that, it's my pleasure that we're going to have opening remarks from NCUA's board chairman, Mr. Todd M. Harper. And so I'm going to turn everything over to Todd. Todd, please.
Thank you so much, Catherine, and good afternoon, everyone, or if you're on the West Coast, good morning. Thank you for joining today's webinar. Thank you also to the staff at the CDFI Fund for their partnership with the NCUA in getting the word out to credit unions about upcoming federal government funding opportunities. Today, the Treasury Department has certified nearly 1 in 10 credit unions as community development financial institutions, making them available and eligible for CDFI grant funding. And MDI credit unions make up roughly about the same percentage of all federally insured credit unions. That's 1 in 10. Additionally, more than half of all credit unions are certified by the NCUA as a low-income designated credit union, which means they are eligible for funding from the NCUA's Community Development Revolving Loan Fund. Those numbers, both between the NCUA's programs and the CDFI's programs, present opportunities to better serve members and communities, to promote financial security, to expand access to safe, fair, and affordable financial services and financial services products, and to invest in the future. These statistics also demonstrate how the credit union system is working to meet its statutory mission of meeting the credit and savings needs of members, especially those of modest means. The communities and members you serve grow and thrive the most when you focus efforts at the grassroots level by investing in people and startup small businesses, by providing personal finance and financial literacy education, and by building capabilities to serve members and communities better. The NCUA and the CDFI Fund are both committed to providing resources to help you capitalize on the funding opportunities that are available. Therefore, you're at in for an informative afternoon today. Thank you for your interest in today, and thank you for your ongoing efforts to strengthen your communities and the households that you serve. As always, be safe, be well, be kind. And with that, let me turn it back to you, Catherine.
Thank you so much, Todd. We really do appreciate those inspiring comments and the import of these programs. They certainly are important for credit unions in general, but especially for our minority depository institution and low-income designated credit unions to help serve their communities. We really appreciate those remarks. Thank you. So let's go over the agenda quickly. We've already had the welcome and we've had Todd Harper's opening remarks. And now then we're going to go next into the overview of NCUA's 2022 grant initiatives. It's going to be followed by an overview of the CDFI Fund Small Dollar Loan Program. And then we're going to have an interview with a panel of past awardees, going to our question and answers and our closing. But you know how we go. Before we do that, we have a poll question. I'm going to read it first. It'll pop up on your screen, and you'll use the radio buttons on your screen to answer this question. Wait until it comes up. We want to know the asset size of your credit union. Are you 0 to 10 million, 11 to 50 million, 51 million to 100 million? Are you greater than 100 million? Or maybe you're not a credit union. So I'm going to ask Franz to put up the polling question now. And there it is. It's right on your screen. Again, here's the question. Use the radio buttons on your screen to answer, please. What's the asset size of your credit union? Are you 0 to 10 million, 11 million to 50 million, 51 million to 100 million? Are you greater than 100 million? Or maybe you're not a credit union at all. So select one of those buttons, 0 to 10, 11 to 50, 51 to 100 million, greater than 100 million, or not applicable, or because you're not a credit union. We'll give you a couple of seconds to answer that poll for us because we're really interested in knowing. And let's close the poll out and see what the answers are that we have. Okay. So we have quite a few that are greater than 100 million on this call today. And the next largest one is, we didn't get an answer, but we also have a nice segment that are in the 51 to 100 million. So we have a decent representation for all of our credit unions. That's good. So let's see. I think we also have another polling question, Franz. So here's the question. This is our second polling question. Please help us with this. And again, wait until the poll question appears on your screen. To which agency has your credit union applied for funding in the past? Would you say NCUA only or the CDFI fund only? Have you applied to both NCUA and the CDFI fund? It's neither. We've not applied to either agency, or maybe it's just not applicable. So we're going to put the polling question up. Franz, if you'll show the polling question for this next polling question. And let's see. Do you have it up, Franz? There it is. To which agency has your credit union applied for funding in the past? Is it A, the NCUA only? B, is it the CDFI fund only? C, have you applied to both NCUA and CDFI fund? Okay, no, haven't applied to neither. That's D, and E is not applicable. So please use the radio buttons on your screen. To which agency has your credit union applied for funding in the past? A is NCUA only. B is CDFI fund only. C is both. D, neither. And E, not applicable. Let's give a few seconds for that. And now let's close the poll, Franz, and see what answers we have. So, okay, looks like a widespread. We have the most that we have here is that those credit unions that are on haven't applied to either, but we have quite a bit that have applied only to NCUA, and we have quite a bit that have also applied to both the NCUA and the CDFI fund. Fantastic. Okay. So now that we've gotten this information, and we appreciate your responding, we're going to turn this webinar over to Joshua Krantz and Ron Meredith, and they're going to discuss an overview of NCUA's 2022 grant initiatives. Josh and Ron.
Thank you, Catherine. Welcome, everyone. We hope that you are able to find this as informative. The 2022 CGRLF grant round is currently underway. We're here to provide low-income credit unions with resources to build their capacity and reach underserved and underbanked communities. The first thing I wanted to point out were some critical dates. As I mentioned, the application intake period is underway. It began about a month ago. The last day to submit your application will be June 24th, so you still have a few weeks. If you have any questions, you could reach out to us and contact us via email, and we'll have that email information up at the end of this presentation. And you'll have until June 17th to contact us. That is because it typically takes 2 to 3 days for us to respond, possibly longer as we get closer to the end of the intake period. We tend to get a lot of questions in the last couple of weeks, so please just be patient if you do send an email in. And then we hope to have the award decisions made by the end of this summer. So August 31st is when you would find out whether or not your application was approved. A few things that you'll need to know if you want to apply for a CGRLF grant is you will need to be a low-income designated credit union. So unfortunately, if you do not have the low-income designation from the NCUA or the equivalent state regulator, you will not be eligible. But if you do, we encourage you to apply. Something else you'll need is an active registration in the System for Award Management System. So that is the sam.gov system. Just letting you know, there's been a change in that system in the last month or so. So if you're familiar with it, you would need a DUNS number provided by Dun & Bradstreet. And now we are no longer using the DUNS number to identify credit unions in the SAM system. SAM will give you a unique identifier number, a UEI, as you create your account. Something to keep in mind if you do not have an active SAM registration is that it may take several weeks to go through that process. So it's really important, as you see, our application is due in about 3.5 weeks. It's really important that you look into sam.gov and make sure that your application, your registration is up to date. Getting into the initiatives themselves this year, we're offering 4 initiatives. Credit unions can apply for only one initiative, but they are the training initiative, which is a maximum award amount of $5,000. And project activities include continuity and succession planning, leadership training, and staff development. The training initiative is focusing on strengthening credit unions through these activities to help develop strong leadership and strong operational staff and professional development. The next initiative is the Digital Services and Cybersecurity Initiative with a maximum award amount of $10,000. The Digital Services and Cybersecurity Initiative provides funds to enhance the protection of credit unions and their members against cyber attack, to increase access of low-income and underserved communities to safe and secure digital financial products and services, and to acquire software and equipment that is needed to support remote work posture or for product and service delivery. The next initiative is the Small Low-Income Credit Union Mentoring Initiative. That is for up to $25,000. And the purpose of this initiative is to encourage partnerships between strong and experienced credit unions and smaller, low-income designated credit unions to provide guidance and increase the smaller credit unions' ability to thrive and serve in low-income, to serve low-income and underserved populations. This grant can be used for eligible expenses associated with facilitating a new mentorship only. So we want new partnerships between larger, not even necessarily larger, but stronger, more experienced credit unions and small low-income credit unions. Credit unions can use these funds for projects related to expansion and growth, and also improved management and operations. The final initiative that we're offering is the Underserved Outreach Initiative, and the maximum award amount is $50,000. The Underserved Outreach Initiative is designed to help credit unions implement innovative outreach strategies to increase access to financial products and services in underserved populations. And you can do that by providing new or expanded outreach efforts, new or expanded financial education programs, or new or expanded financial products and services. You can find out more about each of these initiatives, including what information we're looking for in the application, by reviewing the 2022 application guidelines, which is available on our website. So if you go to ncua.gov, you'll find the grants and loans website under the source, I think it's the resources page. All grants are reimbursable. The credit unions are given 1 year to complete their project. They are responsible for expending their own resources on any project expenses, and then at the completion of the project, they will submit for reimbursement from the NCUA. Something new I'd like to point out, we have a new performance measurement requirement in our application. Sorry about that. We are asking applicants and credit unions to provide some performance metrics such as asset growth, loan growth in number and dollar amount, how many members you're serving, membership growth could be a performance metric, and we want those to be directly linked to your project. It may be a little bit harder to directly link, for example, membership growth to a project such as a digital service grant where you're having digital security strengthened. However, you should be able to find an indirect link. So in that example, having stronger cybersecurity will allow the credit union to provide more online products and services, which then may lead to an increase in membership. You want to explain how the grant will help the credit union meet these goals and metrics and accomplish the greater goals of the credit union. And again, you're going to want to provide a benchmark, which is the status at the time of the application, and the goal, which will be the expected outcome at the end of the 12-month performance period. Finally, some application tips. As mentioned before, our grant round application guidelines, there's a lot of very helpful information there. So I really recommend that you read these guidelines carefully before applying. Your application narrative should describe how the project will help the credit union achieve its goals and how success will be determined. So you want to have your application tell a story. You want to, give our reviewers a clear understanding of the needs of the credit union, what impact the grant will have on the credit union, and what impact the project will have on credit union and its members. And then finally, please don't procrastinate. As I mentioned earlier, it may take several weeks to get your sam.gov registration to be active. You won't be able to get through our application if you're not actively registered in SAM. Also, we do tend to get a higher volume of applications in the last 2 weeks of the intake period. So, there are prone to the website being very slow or other things that may be affected by just an increased volume on our servers. And again, I mentioned earlier in the presentation, we're only accepting questions until the 17th of June because we need to take time to consider our responses. We want to give you accurate information. And so if you do have any questions, the sooner the better. If you are able to apply earlier rather than later, we really recommend that. I'm going to put up some contact information. This email address is frequently displayed on our website. It's in our grant application guidelines, but please take a minute to jot it down. It's cureapps, CUREAPPS, @ncua.gov. Again, all emails we tend to get back to you within 2 to 3 days, so we do appreciate your patience. And now that we've come to the end of our slide presentation, I'd like to turn the camera over to Ron Meredith, who will be demonstrating what the application looks like in our cyber grant system.
As Josh mentioned, we log into the cyber grants portal, and once you get there, you come to this screen, and you scroll down to the 2022 CDRLF grant application. Click there, and the SAM registration page is the first one. And of course, you verify your information here. And my SAM number is already here this time, but it's generally not usually there. But you check the value, make sure it's correct, and save and proceed. On this screen, you would check the people that are the contacts for the cyber grant, and that information is very important because we frequently reach out to credit unions for questions. Sometimes something's maybe not made necessarily very clear, and we need some clarification. So, you should not list the general number. If you have a direct line, please include the direct line and that in a direct email address. On this page, you would of course make sure your information is correct. Josh mentioned that there's no need for a DUNS number, but I'll just enter 1, 2, 3, 4, 5, 6. So just make sure this information is correct and save and proceed. So now we're in the actual application here. So you would click the drop down and you would select which initiative you like to apply for, and again, you can only select one. So digital service is probably the most frequently requested. So you would enter the amount of the grant requested, title your.
Ron, your sound is going in and out. Can you speak right into the mic?
Okay, I'm sorry. My apologies. So you title the project. Make sure your start date is after the award. I'm sorry, after the approval period, which starts September 1st, 2022, and runs through August 31st, 2023. Select the initiative that you like to select the initiative initiative. I'm sorry, I stutter, guys. I apologize. But select the initiative you're interested in, and at the information. I'm sorry. As Josh mentioned before, we're looking for performance metrics. So I think one area that you could probably focus on in terms of an upgrade of the website, you would say maybe you want to serve more members. So in that description, you could put members served, and you would describe how you would, how those members would benefit from the service. If the benchmark, if you're not serving if not many members are using the website, the benchmark would be the current usage rate. And you scroll over here, and you would reach that number that you want to double that the number of members using the website. And for here you would go to add more of the descriptive information. Your narrative here should just describe how the steps involved in actually implementing the program. Here it will be the actual project, and I'm sorry, my volume is not good. I'm sorry. And you would type the amount of the project will be covered.
I can narrate, Ron, if you're having some technical issues with your microphone.
Please, Josh.
So Ron is going over the budget section of the application. Again, what you're doing there is just kind of telling us what each activity that your project is comprised of, and then how much the total project would cost, and how much of those costs will be covered by the grant that you're applying for. This final section, this additional supplemental documentation section, I want to stress this is a little bit of a narrative and a little bit of an upload, but we're not looking for additional narrative. We don't need you to further justify your project. This is something where if you're presenting an estimate, in this case, you already have a contractor lined up to update your website and you have a proposed quote, you can include it there. There is plenty of space for you to put your narrative in the project narrative section. And as you can see, if you forget a question, the system will prompt you to go back. Hit save and proceed, and you can review the terms and conditions of the grant award. Enter the name of the credit union authorized official, so typically your CEO or COO, and check the box to agree to the terms and conditions, and hit save and proceed. And then you'll see a read-only review of your application. If you have any edits that need to be made, you can click on the back button to go back into the application. Just take a quick look and make sure all of your information is accurate. And then you would hit submit. At that point, we're going to hit save so that doesn't go through as an application. But at that point, you'll get a confirmation that your application's been submitted. You'll get an email saying that your application's been submitted, and you're all set at that point. We mentioned earlier that you can only apply for one initiative. So if the system won't stop you from applying twice, but if we get more than one application, we're only going to accept and review the first application we receive. And I believe that's it for our presentation. We hope that everybody, found it informative. We hope that you're interested in applying for a CDRLF grant this year. Remember, you have until June 24th to get your applications in. And I will mention the email address again, cureapps, CUREAPPS @ncua.gov with any questions that you may have. Thank you so much.
All righty. Thank you, Josh and Ron. Let's go to our next panelists, guests, rather, speakers. Tanya McInnes and Julie Sandler with the CDFI Fund. So I'm going to turn it over to Tanya. Tanya, please.
Great. Thank you, Catherine. And just want to start off by saying that we really appreciate this opportunity to present to the membership. You guys are doing great work in your communities, and we feel it's an honor to offer programs to help you do the things that you're doing. So again, thank you for this opportunity to present to you the small dollar loan program. Catherine, you can go to the next slide, please. So I'm just going to spend a few minutes giving you an overview of the small dollar loan program. Julie, my partner, you'll hear from her in a few minutes, and she's going to talk more specifically about the application. So we're not going to go over the individual application components, the submission or review process. Please feel free to reach out to us separately if you have any specific questions related to your application. Next slide, please. So the small dollar loan program staff is small. Again, I'm Tanya McInnes. I'm the program manager for the small dollar loan program. And on our staff are Julie Sandler, our senior management and program analyst. Again, you'll hear from her in a few minutes. Michael Fulton, who is our management and program analyst. He actually joined us a little over a month ago. And actually, as of last week, we have a fourth person. Her name is Amy Apitz, and she is also a management and program analyst. Next slide, please. So the small dollar loan program was actually established in 2010 as part of the Dodd-Frank Wall Street Reform and Consumer Protection Act. So a little over 10 years old, but we received funding for it for the first time in 2020. So, and we had the inaugural round last year. Really excited about that. The demand, et cetera, was well exceeded our expectations. For the 22 funding round, which opened about a month ago, we have a little over $11 million. And the program was created to help certified CDFIs address the issue of expanding consumer access to mainstream financial institutions and to provide alternatives to high-cost, unaffordable small dollar loans. And also the program was created to help the unbanked and underbanked gain credit, build credit, gain access to affordable credit, and again to have greater access to mainstream financial system. Per the small dollar loan program statute, the grants can only be used to support small dollar loan programs that offer small dollar loans to consumers that do not exceed $2,500. They must be repaid in installments. There cannot be any prepayment penalties, and the payments must be reported to at least one credit bureau. Also, per statute, there are two eligible uses for the awards. One is that the awards can be used for loan loss reserves to cover the losses associated with establishing a new small dollar loan program or expanding an existing small dollar loan program. And the award can also be used for technical assistance, for technology, staff support, and other costs associated with establishing a new small dollar loan program or expanding an existing small dollar loan program. Please note that our grants cannot be used to make loans directly to consumers. Again, these are all statutory requirements. In this slide shows just a few examples of how past successful applicants propose to use their awards, and from which we make determinations and decisions to for them to receive awards. And so just going to highlight a couple here now. But one example is that a recipient is going to use their award to attract capital from third-party investors. And there are investors who require at least a 15% reserve, for example, before they further capitalize or capitalize a small dollar loan fund. And so by using our grant to capitalize the loan loss reserve, they are able to attract capital from other investors. And then another use that we saw pretty frequently when we reviewed applications last year was that the recipient is going to use a technical assistance award to grow their processing capabilities so that they can service the small dollar loans once they make them. So many uses. Again, these are just a few examples here. And I do believe that this presentation will be available to the membership in the soon. I'm sure Catherine will provide information about that later so that you can access this at your leisure. Also, I want to let you know that we do have, if you go to our website, we do have more information about the program. Next slide, please, Catherine. Applicant eligible. You want to spend a few minutes talking about applicant eligibility. Again, the statute is pretty clear on this. There are three types of eligible applicants. The first one is the applicant that applies individually as a certified CDFI. The second eligible applicant type is a partnership between a certified CDFI and a federally insured depository institution, we also call a FIDI, that has a primary mission to serve targeted investment areas. And then the third eligible applicant type is the partnership between two or more certified CDFIs. On the next slide, you'll see that the statute goes into even more detail about applicant eligibility based on award type. So per the statute, if you're interested in just receiving or being considered for a loan loss reserve award, the eligible applicant types are those that are applying individually as a certified CDFI, or those that are applying as a partnership between a certified CDFI and a FIDI. If you are interested in being considered for a technical assistance award, the eligible applicant type are one, if you're applying individually as a certified CDFI, or if you're applying as a partnership between two or more certified CDFIs. And if you're interested in a loan loss reserve and a technical assistance grant, then eligible applicant types are those CDFIs, certified CDFIs, applying individually. Next slide, please. And now I want to just spend a few minutes talking about the prohibited practices. So this is all spelled out more, it provides more detail in the Ncwa, in the fiscal year 2022 small dollar loan program, Ncwa. So I'm just going to just list them or state them here as they're listed here. So our awards will not be eligible to programs or products where the following lending practices or loan characteristics exist. So your small dollar loans cannot have high rate loans. They cannot have coerced automatic loan repayments. There cannot be excessive refinancings. There cannot be any loan add-ons such as credit insurance. They cannot be secured, require security on them. There cannot be excessive late fees on any missed loan payments. There cannot be any abusive overdraft practices or any aggressive debt collection practices. And there cannot be forced arbitration if you're dealing with delinquent borrowers. Again, the Ncwa goes into more detail about each prohibited practice, including providing definitions for each one. Next slide. Now, likewise, although we do provide for prohibited practices that our awards will not support, we also do have a list of what we're calling preferred loan characteristics that if your small dollar loan program offers any of these, that your application will be reviewed more favorably. So if you offer small dollar loan terms that exceed at least 90 days, if you have ability to repay underwriting that considers both the borrower's income and expenses as part of your underwriting process, again, that your application will be reviewed more favorably. If you make loan decisions within 1 business day after receiving all required documents, it's considered a preferred loan practice. Next slide, Catherine. And if you offer a reduction in the borrower's loan rate, if the borrower elects to use automatic debit payments, and if you have automatic saving features that are built into the regularly scheduled payments where those excess payments are going to establish a savings account for that borrower, assuming that the payments, the ultimate payments are still affordable. Again, that's a preferred loan characteristic, as well as if you offer access to financial education and credit counseling. Next slide, please. The award sizes, again, this is also spelled out in our NOFA. So for a TA award, the award amounts range from $10,000 to $150,000. And then for the loan loss reserve awards, you can receive awards of up to $350,000. Those amounts are based on your projected lending over a 3-year period, which information you provide in your application. And so once we have all of that information in your application and you are selected to receive an award, we then will then size the awards, determine the award amounts based on our due diligence review, based on your requested amount, based on your projected 3-year small dollar lending activity. As I stated before, whether you are proposing to use preferred lending practices and your overall risk rating. Next slide, please. I'm now going to turn it over to Julie, and she's just going to give you an overview of the application process. And then I'm going to come back and spend a few minutes just talking about some of our other CDFI fund programs. Julie?
Thanks, Tanya. And I apologize, I'm not on camera. My internet isn't the strongest right here, so I want to make sure I can get through these slides. So, and I'll gloss over some of these slides because some of it does overlap as a federal government grants program with what Josh has already talked about. But for the CDFI fund process with our application for the SDL program, it's a 2-step process with the submission of 2 separate documents with 2 different deadlines and submitted through 2 different systems. So the first part is a standard form 424, SF424. This is submitted through grants.gov, and this form starts your application. The second big bulk of the application is the SDL program application. This is submitted 30 days after you submit your SF424 by the deadline, and this is submitted through AMIS, the CDFI system, Awards Management Information Systems. And so this is where you'll be filling out charts, the narrative, and things like that online there. Next slide. So very exciting. Our funding round is open. It just opened a little over 2 weeks ago. The next upcoming deadline is the SF424. This is due on June 15th. Also on June 15th, you will be required to have your EIN and UEI updated in AMIS at that time. Again, in order to submit your application, you need to meet the June 15 deadline. Otherwise, we will not be able to review your application that is submitted through AMIS on July. Next slide. And again, some of this is similar to what was discussed. The 3 systems that you'll be working through, SAM.gov, grants.gov, and AMIS. The CDFI fund, if you had an active AMIS account as of March 2022, did update your AMIS account with the UEI, but as applicants, you will be responsible for ensuring that your UEI and EIN is updated. I also encourage you to go to our website to review all the application materials and supporting guidance documents. I want to highlight that we did make changes to the application this year based on feedback from the public and CDFI fund staff proposals after one round of going through it. And primarily we tried to make it more useful for the applicants and more streamlined. So we updated tables, we reduced the number of data points collected, reduced the number of years required to collect. We wanted to focus the track record tables to be on small dollar lending as per the definition of a small dollar loan. And so we hope this will streamline the application if you saw it last year and make it accessible to you, and we really encourage you to apply. Next slide. Again, this is just EIN and UEI, really important to have it updated across all three systems. Also really important that the EIN is of the applicant and not of the parent, and the CDFI fund will reject an application submitted with the EIN or UEI of a parent or affiliate organization. Next slide. SAM.gov, Josh touched about this. We want you to register, get in as soon as possible, especially with the upcoming SF424 deadline. CDFI fund does not maintain SAM.gov, so please reach out to them for technical assistance. Slide. Grants.gov, again, this information is available. June 15th is the deadline when you will need to submit your SF424 on grants.gov. And we understand that the award amount requested may differ from the SF424 and the AMIS application. Month goes by, you're working on the application. So the CDFI fund will consider the amount requested and the application submitted in AMIS. So when you're filling out that form, just be aware of that. We understand. Next slide. And AMIS is our CDFI fund system. It's really important that you designate a point of contact and authorized representative. We'll communicate updates, deadline reminders if we have updates to the FAQs. So please make sure you have that information up to date. Next slide. So lots of questions. We have a couple of different ways to reach out to us. Number one, we encourage you to submit a service request through AMIS, but we are also available at the FDLP CDFI.treas.gov email, as well as to give us a call. And with that, for the next slide, I'll pass it back to Tanya to talk about the CDFI fund.
Great, thank you, Julie. And we know we've shared a lot of information with you. Again, I know this presentation will be available soon. And also, if you go to the CDFI Fund's website, we do have this information posted to our website as well. And I want to spend a few minutes just giving some updates about our other programs. Now, given the growing number of programs that the CDFI Fund administers and the increasing array of organizations accessing our programs, I just want to give you an update to those in the audience that may be interested in hearing about this. So I'm going to start off with the CDFI Bond Guarantee Program. The fiscal year 2022 round of the BG program opened on February 25th, 2022, and applications were due April 26, 2022. We will be announcing the 2022 guarantees before the end of the fiscal year. With respect to the CDFI and NCUA programs, the 22 application was released on February 10th of this year. Applications were due on April 12th. For the fiscal year 22 round, 719 organizations requested a combined level of $577 million in award, which is nearly 3 times the amount of available funding. And then up to $214 million is available for CDFI NCUA program financial assistance and technical assistance this year. So again, great demand for this program. As we've done in the previous years, we anticipate announcing the TA awards by the end of this fiscal year, and then the FA awards will be announced at a later date. With respect to the Capital Magnet Fund, the fiscal year 2021 application round closed last year on November 9th. More than $380 million is available for awards, making it the largest application round in the history of the Capital Magnet Fund program. For the fiscal year 2021 round, a total of 146 organizations submitted applications requesting more than $991 million in funding. It's anticipated that the awards will be announced later this spring. The timing of the fiscal year 2022 application round is still being planned. So more information will be coming available. Please be on the lookout for that information. For our New Markets Tax Credit Program, the calendar year 2021 round opened on November 4th last year. Allocation applications were due January 13th of 2022, and we are tentatively planning to announce the allocations this fall. And then for our newest program, the CDFI Equitable Recovery Program, also known as ERP, the CDFI Fund is tentatively planning to open this program later this spring. The program will provide $1.7 billion in grants to CDFIs to respond to the economic effects of the COVID pandemic. It is designed to provide funding to CDFIs to expand their lending, their grant making, and investment activities in low to moderate income communities, and to borrowers with significant unmet capital and financial services needs that have experienced disproportionate economic impacts resulting from COVID-19. And the program is also designed to catalyze growth in the financial and organizational capacity of CDFIs for the purposes of carrying out equitable recovery activities. Organizations interested in applying for ERP resources should visit the CDFI Fund site and review the Preparing to Apply blog post to learn what steps can be taken now to better prepare for the application opening later this spring. We will release more details about this program in the coming weeks. And with that, Catherine, that concludes our presentation. Thank you.
All right. Thank you, Tanya and Julie. We appreciate that. I'm going to ask, we were having a problem with our poll question, so I'm going to ask Franz to put poll number 3 up. Franz, if you can put poll number 3 up, that would help. And so poll number 3 asks this question, and please use the radio buttons on your screen. Does your credit union offer small dollar loans? A is yes, B is no, C is no, but we plan to offer them within 12 to 18 months, and D is not applicable. The question on your screen, please use those radio buttons on your screen. Does your credit union offer small dollar loans? A is yes, B is no, C is no, but we plan to offer them within 12 to 18 months, and D is not applicable. So let's see what our audience says with these polling questions. All right, so, okay. Well, we have quite a bit of our audience that does offer small dollar loans. We have a few that don't, and then we have some that are planning to offer. Now, that sounds good, everyone. So what we're going to do now is we're going to go to our next polling question, and it's poll question number 4. And poll question number 4 says, which agency does your credit union plan to apply for funding during 2022? NCUA only, the CDFI fund only, both NCUA and the CDFI fund, or neither? So I'm going to ask Franz to bring that one up as well. If you bring that one up for us, Franz, that would be great. I'm sorry. Did I read the wrong one? I might have. Hold it 1 second. Poll number 4. I read the wrong one. Sorry, everyone. Let's try that again. Poll number 4. I'm going to share my screen with you. Poll number 4 says, let's get the right one up here. Poll number 4. And it says, which agency, now that is the right one, which agency does your credit union plan to apply for funding during 2022? NCUA only, CDFI fund only, both the NCUA and the CDFI fund, neither, or not applicable? So I'm going to ask Franz to bring that up. That's poll question number 4. Let's see if we can get that up and use the radio buttons on your screen. All righty, here it is. So let's ask the question again. To which agency does your credit union plan to apply for funding during 2022? The NCUA only is A. B is the CDFI fund only. C is both the NCUA and the CDFI fund. And D, neither. And E is not applicable. So we're going to ask that again. Which agency does your credit union plan to apply for funding during 2022? A is the NCUA only. B, the CDFI fund only. C is both the NCUA and the CDFI fund. D, neither. E is not applicable. So let's close the poll and let's see what answers we got from our audience. Okay, so most are going to apply to both the NCUA and the CDFI fund. Awesome. And we have some that are going to apply to the NCUA only and some CDFI only. And then we have some that say, well, I'm not going to apply for either one. Well, think about it. Might be a good idea if you did. So let's move on in our presentation. And I think we're going to turn it over now to Pamela Williams, who is the program manager for our Minority Depository Institution program. Pam is going to interview our panel of past awardees. So I'm going to stop sharing and turn it over to Pam. Pam?
Thank you so much, Catherine. Now that we've heard from the subject matter experts for NCUA's grants program, as well as the subject matter experts at the CDFI fund on the small dollar loan program, we thought it would be helpful for you to hear from those who have had success with these awards. So we've invited a couple of credit union representatives to talk about their experiences with these awards and to pass on any advice or tips that they have to you who may be considering applying for this year's funding from either the CDFI fund or from NCUA, or for those who actually know that they are going to be applying. So at this time, I'd like to invite the credit union panelists to share their videos. And I would like to introduce to you Kimberly Nichols, who is the CEO of Bridgeway Federal Credit Union, Sherry Lee Strickland, who is the CEO of Arbuckle Federal Credit Union. Go ahead and wave, Sherry Lee. And also the Vice President of Lending at Hawaii Federal Credit Union, Jacob McWhorter. So welcome and thank you all for joining us. What I'd like to do is just allow you a few minutes to introduce yourself in terms of the role that you have at your credit union, and then also introduce your credit union to us. Tell us what designations or certifications your credit union may already have. Tell us a little bit about the demographics of the field of membership that you serve, especially if your credit union is a minority depository institution. Which categories of minorities make up your membership, the predominant majority of your membership? And then talk to us a little bit else about what you'd like to share with your credit union. So with that, I'm going to start with Kimberly.
Okay, well, hello everyone. I am Kimberly Nichols, and I am the CEO at Bridgeway Federal Credit Union. We are located in Phoenix City, Alabama. We serve the underserved communities of Russell County, Alabama, but also Muskogee County and Dougherty County, Georgia. We, until this year, we're a relatively small credit union, about 15 million in assets. We did recently complete a merger that had us grow a little bit into the Georgia area, which helped us to just be able to serve some more areas that needed some help in some of these programs that help the underserved. So we are a certified community development financial institution. We were certified in 2010. We're a certified minority depository institution with about 70% of our membership is made up of African American minority. And we also have our low income designation. And so we have a strategic plan that's kind of built around serving those underserved people, because when we started our process to get our certification for community development, we realized that there were major needs in our area, in our community, that were unmet. We had about 60% of the population that were double the poverty rate of the national average, and we were just inundated with predatory lenders, and so we felt like it was our job and our mission to do something about that. So that's when we started instituting these small dollar loans, the payday alternatives. We have quick cash loans with no credit check. And those are really good because they help us build relationship. You know, the requirement there is we want you to have your direct deposit here. We want you to have a job, and we want you to have a relationship with us. And so we're able to do that and build relationship, which helps us to get into the financial counseling area. And when our members need cars, we'll help them shop for the right car at the right price. So we like to serve our members that way. And these grants have really opened the doors for us to be able to help those people that are a little bit riskier for us and that we might not be able to serve without the help. So that's what we do here.
Thank you, Kimberly. Appreciate that. Next, I'd like to hear from Jake at Hawaii Federal Credit Union. Jake?
Thank you, Pamela, and good morning and good afternoon to everyone. I am the Vice President of Lending here in Hawaii at Hawaii Federal Credit Union. I've been here for roughly 6 years. We are a low-income designated credit union out here in Hawaii. We are located in the Kalihi neighborhood, so anybody that's been out here, you probably drive right past us on your way to Waikiki, but you probably don't stop in the area. We're roughly $110 million in assets. We are able to service all the island of Oahu, which is good. Our low-income designation has really helped us take care of our community. The Kalihi community does have a large number of low-income housing where we do like to go and provide financial education to people in those housing areas. The grants that we have received in the past with our low-income designation, we have used that so that we can get more of our staff certified to be certified credit union financial counselors, which does really help with the community development part and also just the financial counseling when people are applying for loans, whether it be the small dollar loans, auto loans, consumer loans, which has always been our specialty is consumer lending with, unsecured loans, autos, home equity lines of credit. It's been a way for us to help our membership, which is mostly blue collar, which is a lot of construction workers and a lot of hotel workers that are needing to work sometimes a minimum of 2 jobs just to make ends meet with the high cost of living here in Hawaii. So the grants have been very helpful.
Terrific. Thank you so much, Jake. And then next, Sherry Lee, would you tell us a little bit about yourself and Arbuckle Federal Credit Union?
I will. I am the president and CEO here, and I've been at the credit union since '09, but I took over as CEO in 2016. And we are a federal charter for a community of 5 rural Oklahoma counties. And we received our CDFI certification in 2018 and received our first small dollar loan grant in 2021, which we received the funds in 22. So we really just got our program started for the small dollar loans in February of this year. So we're still new into it. Part of the reason that, and our asset size, sorry, let me back up, our asset size is just over $9 million. So we're a very small credit union. Part of the reason why I went for the CDFI certification and then the grants is because in our town of Ada, Oklahoma, of a population of about 19,000 people, we have the largest bank or largest credit union in Oklahoma, which is Tinker, as well as Communications Federal, which is number 3 in Oklahoma, in our town, branches of them in our town here of Ada, plus numerous banks. So it was a way that I could differentiate myself from the 2 large credit unions and still make us viable in this community, because there was such a gap between what the banks and the credit unions could do versus what the quick cash places, the payday alternative loan places. There was just this large gap between what the banks and credit unions could do and those small dollar loans, high interest loan companies. And so I was hoping to fill that gap with our small credit union. And so that's why I started the small dollar loan program. In Ada, we have about, like I said, 19,000 in population, but we have roughly about 24 of those that fall under the predatory lender or the supervised lenders in Ada alone. So 24 for a population of 19 is just, they're on every corner. So I've seen people that have had literally 5 to 8 of those loans and cannot make it from payday to payday. So this is a way for me to offer them a better alternative, and when possible, consolidating those to try to, re-educate them. We've also put in a program, a financial literacy program that we've partnered with a company to do, and as well as I go in and I teach credit reports to high school students and different things like that, just trying to re-educate the people in this area and in reaching out into my other 5 counties. There's just a huge need for it.
Thank you, Shirley, for you actually gave a nice lead into one of my next questions, which is explaining how the award in the case of Arbuckle Federal Credit Union, it was last year's small dollar loan program. I appreciate that you explained how that funding fit into your credit union strategy. So I want to now turn to the other 2 panelists and ask them the same questions. Kimberly, would you tell us how the CDRLF, the NCUA's grant, fit into your credit union strategy? And then once she's done, Jake, would you follow up and tell us about how it fit into the small dollar loan program fit into Hawaii Federal Credit Union's strategy?
Sure. It became our strategy and our mission. Again, a lot of this came about when we really started digging into what the demographics of our community was and realized all of the families and the people that were struggling and turning to these predatory lenders. We knew that there was a need there and we wanted to offer these products, but we were a very small credit union. We knew that we would be taking on more risk by doing that. And sometimes that's a little tough to walk into. Fortunately, I have a very open-minded board, and they were willing to do that. They're very community involved, community minded, and they want to help. And so they were open to this idea. But we decided to pursue the grant road in order to get that help to help us take on that risk. And so, sometimes there are other areas of your credit union you have to sway a little bit to get them on board, underwriting, things like that just see the risk a lot more. And, that's kind of their area. And so it enabled us to be able to take that risk in a way that we could do it safely, we could do it soundly. Sometimes you have to we consider our loan policy a living document like the Constitution. You kind of have to figure out what's going to work and what isn't. And so it really enabled us to do that. We can try things, we can look at things, we can look at the risk, and it enabled us to do that and do it safely and soundly and figure out what our program looks like. So it really fit the plan that way and helped us get it off the ground and figure out which way we needed to go.
Well, Kimberly, I'm glad you mentioned that, because one of the very important things that we find very important here is the board approval and involvement. Because without your board being able to understand that you are going to be taking on a lot more risk, it's a very tough hill to climb if the board isn't accepting of it. For us here at Hawaii Federal, we've always done small dollar loans. We actually have a program where people with no credit can come in and get the small dollar loans. We like to be the people that are willing to give these people their first shot, right? And that's where the credit counseling comes in, where we're letting people know, hey, we're giving you the shot. Now it's up to you, right? But we've seen the predatory lending, just like everywhere else. It is still here in Hawaii as well. So our goal was to be able to provide loans and things for people to get started and get off the ground without having to pay, very high priced loans back where people just can't dig themselves out.
Thank you for that. And so the next question I want to pose to each of you is, what lessons learned or advice do you have to offer for other credit unions that are seeking to apply to the NCUA the NCUA's grant and loan program or the CDFI funds small dollar loan program? Let's go ahead and start with you, Jake.
Again, I would say starting with getting board approval and making sure that your board is on board with the project is number one. From there, it's really just getting everything in line and in order. I know it may be something, I believe it may be a upcoming question, but we do partner with a third party who does help us with the grant writing and also the annual certifications. So that is a big part of what we do, is working with that third party.
And Kimberly?
I would agree with that. We also did get some help with our grant writing. The first couple of years I did it on my own, and it's due at midnight on a certain day, and I'd be pushing the submit button at 11:59, and still didn't have a whole lot of success. So when you need help, it's okay to get that, and it's okay to ask for it. There are experts out there, and just remembering that you don't have to reinvent the wheel. You can get help from other programs. That's what this is all about, is so that people can hear about what's worked and what hasn't worked, and get help from others that have traveled the road before you. I think there's a lot of wisdom in that and a lot of help, so that you don't feel like you have to do it all yourself.
Thank you for saying that. I appreciate that that it comes from credit unions to other credit unions. I think is very, very important, and particularly something that would be advice well heeded. And then Sherry Lee, what are your thoughts about lessons learned or advice for prospective applicants?
Well, for a small credit union, for example, with our staff, we have literally 2 full-time employees. I'm one of them, and a part-timer. So I don't have the time, hours, knowledge what to be a grant writer. So yes, I reached out to a third party as well. Search around for a third party that will work with your size credit union. I was lucky enough to find another, the consultant that I used, he used to be a small credit union CEO, so he knew our struggles financially. And so he was able to work with us from a small credit union standpoint. So it's not so expensive that you cannot use an outside third party. So definitely reach out for help. It's with the CDFI applications. The NCUA applications, to me, weren't as difficult, so they didn't require, I haven't, for those, used an outside source for those. So in my opinion, the NCUA ones are easier to apply for without the third party. This round may be different. I haven't got completely into it, but that's what I've experienced in the past.
Thank you so much for that. And so I appreciate the panelists for each taking the time to talk with our audience today about their experiences with both the small dollar loan program and the NCUA's grants and loan program. I want to make sure that as we're kind of winding down coming towards the end of this webinar, I want to leave time for the Q&A. So Catherine, I'd like to turn the platform back over to you so that we can move forward with the Q&A. And panelists, Kimberly, Jake, and Sherry Lee, thank you so very much for your insights and for your time.
Fantastic.
Thank you.
Thank you.
Thank you.
Thank you, panel. I agree with Pam. Your insights were absolutely wonderful. I'm sure everyone in our audience appreciated it. I'm going to ask, while we do our Q&A, I'm going to ask Franz if he will put our final, I think we have 4 polling questions, but they're in there as one. Can you put that up for me, Franz, so that our audience can answer the polling questions while we do our Q&A? So they go like this, everyone. The first poll question says, how did you initially hear about this webinar? The second one says, did this presentation help you understand the NCUA's 2022 grant initiatives and the CDFI Fund's small dollar loan program better? The next one is, would you recommend this webinar to others? And the fourth one is, have you attended other CURE, Office of Credit Union Resources and Expansion webinars? So while you work on those 4 polling questions, we're going to go to our Q&A. So I'm going to ask the audience, let me pop the Q&A window out. There it is. I'm going to ask the audience to, the speakers from the CDFI Fund and our Grants and Loans Division, Josh and Ron. Here's the first question. So the credit union says, is the allowable marketing expenditure from the grant restricted to only being used to provide foreign language marketing, or can it be used to develop and deploy English-based marketing materials? So I think that might be, is that for you, Josh and Ron?
Yeah, that sounds like it's for us. There are more instructions on marketing expenses in the application guidelines online. It depends on the project. Obviously, in the case where you're reaching out to non-English speaking community, that is definitely the marketing we want to do. Have marketing materials in, for example, Spanish. But if you're advertising a new product, such as a new mobile app, you can certainly do that in English. There are limitations for the digital services and cybersecurity initiative on marketing. I don't remember exactly what that is. I believe it might be 25% of the project. But again, check the initiative guidelines in the application guidelines for each initiative, rather.
Awesome. All right. Very good. Here's the next question. Does the authorized signer have to be the CEO, or can it be another C-suite employee lead for the project? So is this also for you, Josh and Ron, or is this a CDFI fund? Tanya, is this you guys?
We do have an authorized representative that we ask for in our application for the CDRLF program. For that, it doesn't necessarily have to be the CEO. It could be another, executive. But it would be the person who is the main contact or one of the main contact persons. Ron had highlighted in the demonstration that you select 2 contact people, a primary and secondary. So it could definitely be, a COO or a CIO, depending on the credit union structure.
Very good.
And then similarly, for the small dollar loan program application, an authorized representative must sign the application, and then the authorized representative, also known as the AR, it could be the CEO, it could be a senior level official of that institution. It does not need to be the CEO.
Awesome. Thank you, Tanya. Okay, so here's the next question. What criteria is most important to you in judging member growth, member benefits, safety, etc.? I think this might be Josh. I think this might be you again.
Yeah, that sounds like you're referring to our performance metrics.
Right.
If that's the case, then there's no priority on those. The performance metrics are going to be based on your application. So we're not prioritizing credit unions that want to grow their members over growing their portfolio. We want to make sure that you're clearly justifying how those performance metrics are supported by your project. So, for example, if you're creating a new mobile app, right? The purpose of that app, it could be to just, get members more access to their finances without having to come into the branch. So your performance metric might just be members served, right? You may be a new mobile loan application. So then that may affect how many, the size of your loan portfolio. What you need to do is, like I mentioned, tell the story. What are you trying to accomplish, and how do you know you'll be successful? And with that, that's really what we're looking for. We're looking for a clear understanding of the project, from the reason you need the money to what the outcome will be.
Okay. Thank you, Josh. So Tanya, I think this is for you and Julie. The questioner said, can we apply for both Fa and Sdl or the Ta and Llr grants?
Yes, you can. You can. Our program, the Small Dollar Loan Program, allows you to apply to the programs that the other CDFI fund programs. Just know that if you are selected to receive an award, that you're pay attention to your performance goals and measures, because they're going to be distinct and specific to your Small Dollar Loan Program award. So in other words, you cannot double count, use double counting if you have multiple CDFI fund awards.
Awesome. Thank you. Okay. We did have a question that someone asked about the slides. I believe our slides are posted on the registration page for this WebEx site. Is that correct, Franz?
Correct. Yep.
Okay, great. So here's another question. I think this, Tanya, I think this is you again, you and Julie. Can you apply for a small dollar loan program if I already offer a small dollar loan program?
Oh yes, definitely. And the statute states that our awards can support the creation of a new small dollar loan program or the expansion of an existing small dollar loan program. So yes, you just need to make sure that if you do receive an award from us, that award is used to support your small dollar loans that meet the parameters as stated in the statute, and those parameters are also listed in the NOFA.
Awesome. Okay, I have one more question, and then we're going to have to close out. This question, I believe, also is for you, Tanya, you and Julie. Is the ERP grant going to be open to all CDFI credit unions or just MDI?
Well, that's I don't manage that program. Please refer to our website for more detailed information about that. But the awards will be available to certified CDFIs. So I hope that answers your question.
I think that did. Okay. So what we're going to do now is I'm just going to share briefly our final page because we are fresh out of time. And everyone, I hope you gave us the opportunity, everyone, to answer those final polling questions. We thank you all for joining us this afternoon. We thank our panelists from the credit unions, and we also thank the CDFI Fund for this joint venture. And as I mentioned earlier in the program, when we first opened, the goals of this particular webinar is to promote awareness by credit unions, particularly MDIs and low-income designated credit unions, of upcoming federal government funding opportunities, and also encourage you to apply for the funding. We do appreciate you joining us. Thank you, Pam, who is our Minority Depository Institution Program Manager. We thank you so much. We also thank, like I said, Josh and Ron with NCUA. Thank you, Franz, for being our technical expert here. And we hope everyone has a wonderful afternoon. We'll see you next time, and have a great week.